Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex and today we're analyzing a stock that has been beaten up over the last few months. So we're looking to understand if this stock is trading below its value. Today we'll be looking at Suncor Energy. Suncor Energy is a Canadian integrated energy company based in Alberta, Canada, that specializes in the production of synthetic crude from oil sands. Now, before you worry too much that we're looking at oil stocks, the word oil, there's lots of negative connotations with it. Let's look a little deeper into it to discover if this truly is a great stock to own for the long term. This stock is listed on both US and Canadian exchanges under ticker symbol SU. Before we get into it, if you want to purchase Canadian stocks and pay $0 in fees, click the link in the description below to open your account with Wealthsimple and get $10 free when you invest your first $100. Without further ado, let's deep dive into this giant energy company. There are three sectors within the oil industry: up, mid, and downstream. Suncor is unique as their business model incorporates all three stages, giving them a strong competitive advantage. So sector 1 is upstream. Taking a look at the map, we can see in orange are Suncor's oil sand mines in Alberta. This is where Suncor extracts a lot of their resources, and the oil sands are currently estimated to have 31 years left of life remaining. It's also important to note that they do have offshore mines, however, as mentioned before, the majority does come from these areas. Suncor is the largest producer of this word I'm going to butcher now. It's bitumen, which is commonly known as asphalt. 70% of the global use of asphalt is in road construction, where it is used as a binding glue mix to create asphalt concrete. As the largest producer, they will have great bargaining power and the ability to offer this material at competitive rates. Suncor also produces conventional oil, heavy crude oil, and natural gas. Next up is midstream. Midstream focuses on the storage and transportation of resources. Suncor uses the midstream sector to optimize product movement across the value chain. Long-term deals and joint ventures in rail and the development of infrastructure such as pipelines allows Suncor to minimize costs in the costly middleman process of transporting the goods. As shown on this map here, we can see that Suncor is able to reach a large amount of North America with their pipelines. Whether these are completely owned by Suncor or not, they are a part of these projects, which does allow them to move their goods at a cheaper cost. Suncor also has significant space for storage that allows them to hold materials during the time between extraction and transportation. The final sector is known as downstream, or refining and marketing. Suncor operates refineries in Alberta, Ontario, Quebec, and Colorado. Refineries complete an industrial process in which the raw materials are transformed and refined into more useful products, such as petroleum, gasoline, diesel fuel, asphalt base, and jet fuel. I should also mention the marketing side of downstream, in which Suncor sells products directly to the end consumer in the form of petrol and diesel. Suncor's main outlet for this is Petro-Canada, in which they have over 1,500 locations across Canada, controlling about 20% of the Canadian market. In the United States, Suncor also operates retail outlets under Shell and Phillips 66 brands. Now we're looking at the Yahoo stock quote for Suncor Energy. As an investor, this is a key tool to look at from the beginning and gives you a quick snapshot of a company. If you are looking to learn more about this, how to read it, the key metrics and what to look for, click the video on the screen now for a step-by-step guide on how to understand this crucial information. Anyway, on to Suncor. Please note that this was Monday, the 7th of September, in which it was a public holiday, so the markets were closed. This means that the figures may differ slightly when you view this video. First up, we can see the stock is trading at $20.24 Canadian. That's down 43 cents on the day, or 2.08%. Suncor has a market cap of $30.976 billion. You'll notice that the PE ratio over the trailing 12 months is not applicable, and that's because the PE ratio of Suncor is currently calculated to be a negative number. This is due to a big hit to their earnings, in which we'll see later on in the financials. Following on from that, earnings per share is negative $3.54 Canadian, and over the last year, Suncor has been trading anywhere between $14.02 to $45.12 Canadian. Finally, we got the forward dividend and yield, which is currently 84 cents Canadian, or 4.04%. Next up, we'll look at the share price versus fair value. Simply Wall Street is a great tool for all investors, and they offer an estimate of fair value based on the cash flows the company is expected to generate in the future. Simply Wall Street's fair value estimate is $47.46, meaning the stock is currently 56.4% undervalued based on this metric. Those are part of our community know we like to look at the price to book ratio. So this ratio looks at the price compared to the book value of the company, and the book value is the value of the company's assets on the balance sheet after taking into account depreciation. Companies that are below 1 could be potentially viewed as undervalued, whereas those with a higher price to book ratio may be trading at a premium. Suncor currently has a price to book ratio of 0.9, which indicates the stock could be undervalued. And taking a look at some of the competitors, Chevron is trading at 1.1 price to book ratio, and ExxonMobil is trading at 0.9. I think it's good to compare to Chevron and ExxonMobil because these companies are also very large and integrated throughout the many sectors of the oil industry. And as a dividend investor, we always like to look at the growth and history, where we can see that Suncor has been growing their dividend over the past 10 years. In 2009, they were paying 40 cents Canadian, equating to 1.1% dividend yield. In early 2020, they were paying $1.86 at a 7.5% dividend yield, but recently experienced a dividend cut where they're now paying 84 cents Canadian, which is 4.04% dividend yield. Next up, I want to look at the top shareholders of Suncor. I think some valuable information to take away from this is the percentage change, and the percentage change column speaks to the percentage increase in the size of the shareholders' position in the last 2 filing dates, which is approximately 6 months. You'll notice some big players here, such as Vanguard and the Canadian banks, but also down the bottom here we have Berkshire Hathaway, which of course is Warren Buffett's company. They currently own 1.26% of Suncor and have increased their position by almost 30% since the pandemic began. Buffett's company has recognized that the fundamentals of Suncor are strong despite the macro level economy taking a huge hit, not to mention the energy sector in itself. Heading over to the income statement, we can see that total revenue had been growing 2017 to 2018. And then as the economy slowed down towards the end of 2019 and now into 2020, we have taken a big hit to revenues. So it doesn't surprise me with less cars on the roads, less planes in the sky, that we are seeing a decline in the oil industry. And that's why I place a large importance on the strength of balance sheets when I'm looking at oil companies right now. We can see that operating income and gross profit took huge hits in the trailing 12 months. Again, we expect this given the state of the current economy and use of oil in these times. Following on from that, net income has also taken a large hit in the trailing 12 months. Heading over to the balance sheet, we can see that total current assets has remained constant over the past 4 years, and we can see that total non-current assets has remained fairly steady over the past 4 years. And with those two constant, obviously total assets has remained fairly steady over the past 4 years. Jumping over to liabilities, we can see total current liabilities is fairly similar. And the same can be said for total non-current liabilities, and they have been paying down their long-term debt over the past 4 years. So this has led to an increase in total liabilities over the past 4 years. So I want to take this and plug it into my debt to asset ratio calculation and see where we're sitting. So let's smack that $47.393 billion of total liabilities, and we divide that by the total assets of $89.435 billion. We come to a ratio of 0.529. This is what I expect to see for an oil company, sitting around the 0.5 to 0.55 mark. And I don't imagine Suncor would have to sell any of their assets to pay off debt in the short to medium term. So looking at cash flow on an annual basis, we can see that net income took that hit as discussed earlier. And although we saw some good news from 2017 to 2018 in their net cash from operations, it has taken a hit in the trailing 12 months. The net cash used for investing has been sitting around the $5 billion mark. And we can see even in the trailing 12 months, they've continued to invest in property, plants, and equipment, which is what I like to see from big companies during hard times economically, where they're able to go and acquire other companies or invest when interest rates are low. So their net cash from financing activities, we can see that in 2018 and 2019, they were buying back their shares pretty heavily, which is not really what you like to see, as obviously this doesn't benefit shareholders the same way increasing dividends does. So this is definitely something to keep an eye on if you are looking to invest in this company. Then we have the dividends paid, which has been fairly steady over the past 3 years and in the trailing 12 months. But given that they recently cut that dividend, I do expect this number to fall and free up a little bit of cash in the near future. Finally, we can see that free cash flow is down quite substantially over the trailing 12 months and from 2019 and 2018. That's predominantly due to the operating cash flow taking a huge hit. However, the capital expenditure has remained fairly constant. In other words, there's a lot less cash coming in. However, the money going out is fairly similar. So the future for Suncor will depend on technology. In previous years, they have led the way in the oil industry here, being the ones that pioneered oil sands development. Their early investments in technology helped unlock the potential of the oil sands by improving reliability and performance, expanding productivity, and driving down costs while reducing the environmental footprint. They have a great focus on new technology and innovative thinking, and invest in incremental and game-changing technologies pursuing operational efficiencies. Suncor also closely monitors technologies being developed by external parties to determine if and when an investment makes sense to advance the technology or adapt that technology for Suncor's business. An example of this and a project that's ongoing is autonomous trucks, in which they would operate using GPS and wireless communications, which ultimately would drive down the labor cost. With the push towards renewable energies, Suncor has also placed a focus on sustainability. Suncor invested $300 million in a wind project in the county of 40 Mile in Alberta last year. The power project will have 89 wind turbines that can generate 400 megawatts of power. Suncor needs to focus on these projects to ensure they're not dependent on pipeline constraints and commodity price volatility. Finally, the big one, and for many the big question mark, is the oil and gas industry. Many shy away from this sector now, as we have, as a society, pushed towards a renewable and greener future. However, these kind of leaps will not happen overnight. If we take a look at the consumption of thousands of barrels of oil per day, we can see that United States, China, Japan, India, and Russia are leading the way. And although countries like United States are trying to make a move towards renewable energy, countries such as China, India, and Russia are not making the same moves, given their economic position and their growing lower and middle class. We can see that China and India alone make up about 35% of the world population, so that's over 1/3 are still heavily dependent on the oil industry, and I don't expect to see any dramatic change to this within the next 10 years. In many Western countries, society and governments are pushing towards this green energy, this clean energy. It is a little bit more viable to start considering these options. However, countries with a large population of lower class aren't able to make these kind of moves yet, as they simply are not ready for it. Yes, I do see oil falling off in the future. However, I think this could happen the earliest around 25 years, but it could really be anywhere upwards of 50. If you're an investor with a long-term outlook, there are still multiple decades to ride out these energy stocks and enjoy what they can provide a dividend investor with the potential upside for growth and capital appreciation during that period. In saying that, let's not forget that Suncor has been investing in the sustainable, renewable energies, and I think given their size and given the kind of capital that they can put towards these projects, they will become a part of that industry too. And based on my estimated timeline of oil, I think that Suncor will be able to keep up, if not lead the way in this industry. So is Suncor a buy or not? It's definitely one of those riskier ones, and you kind of have to be in it for the long haul. You have to believe in multiple things, such as the timeline of the oil industry, and if Suncor will be able to weather the storm. You've heard my view, so you know I'm buying it. I'll continue to buy it. And given the recent dip due to the lack of demand in the industry, I think not only am I buying a great dividend stock, I'm also going to see a huge amount of capital appreciation in the coming years. That's all for today, folks. Thank you for watching. Remember to like, comment, and subscribe to see videos similar to this one.